So once the lease drops below 80 years, then it can make it difficult for lenders to basically mortgage the property.
If you are getting a 25-year mortgage and you have an 80-year lease, 25 years later, that lease will only have 55 years and expire.
When the property is becoming harder to mortgage, when the exit buyer pool is shrinking,
the value of the property will diminish due to its lengthy lease.
Leasehold reform is once again making headlines in the UK, and the proposed changes, they could have a major impact on property values, investor strategy, and long-term ownership rights. In this episode, we will look at how residential leaseholds work, why lease length matters, and what investors should know about lease extensions, and how recent and proposed reforms could affect landlords and property owners. Now, I'm joined here by three experts who bring legal, technical, and investment perspectives, helping us explore this issue from different angles. First, we have Cheraine Williams from DMH Stallard, a specialist in property and construction disputes. Next, we have Panicos Loizides from CP Papas, a leasehold and franchise made specialist and valuer advising on lease extensions and valuation strategy. And finally, we have Stavros Aristodemou from Consulo Group, a real estate investment manager focused on asset performance and investor strategy. Thank you everyone for being here. It's really a pleasure having such a powerhouse of expertise today. Cheraine, first question for you. For those who are less familiar with leasehold property, can you please tell us what is residential leasehold and why does it matter so much to investors?
So I think the most important thing is to explain really the difference between what we call leasehold and freehold property. So freehold property is really outright ownership of property that isn't time limited and is kind of less restrictive, but you have more control over that asset. Whereas a leasehold property is a time-limited right to live somewhere. It's normally around 99 or 125 years for residential property. And it often includes like the payment of service charge or ground rent. And it's really important that that's governed in a lease and that people basically comply with the terms of that lease. When people are buying leasehold property, investors also need to consider the length of the lease as that affects its liquidity or what we call marketability. So in essence, I think the key point is really 80 years. So once the lease drops below 80 years, then it can make it difficult for lenders to basically mortgage the property or offer mortgages over it or remortgage. Once it gets to 60 or 70 years, it can significantly affect its value. So it could drop to maybe 10 or 20%. So people need to bear in mind that when you buy leasehold property, the length of the term reduces, and as it reduces, so does its price, and also how it can be sold on the open market. And it may only be on short-term leases, really cash buyers that buy that property. One of the other things to consider when buying leasehold property is the actual structure of it. Now, for people that live outside of the UK, they may not even be used to leasehold and how it is actually structured. So for overseas investors, it can be a bit of a minefield because essentially what's important is that lease and making sure that people comply with that. And that includes the payment of ground rent, service charge and other provisions in there, for example, not doing certain things, etc. So to ensure that they keep their asset and it's not a risk, they need to review the lease and make sure they basically comply with the terms of it. When people have bought leases, often we see some issues overlooked, so they tend to concentrate on, well, this is this price, and effectively I can get this amount in rental. But the problem with that is that they then overlook other things on acquisition, which can include things like, for example, if there's restrictions on who can actually sublet the property. So you might buy a property, essentially, and you can't still sublet it to certain categories of people or things like that. The other things include not having a sinking fund for major building works. So that can be issues for investors. Or, for example, leases. Some older leases don't have any lease plans. There might be missing landlords, doubling ground lengths, or just restrictive provisions generally under the lease. So investors do need to look at the wider picture overall when buying a leasehold interest in this country.
Panicos, and why does lease length matter so much? And what changes really when it drops below the 80-year mark?
Firstly, as Cheraine mentioned, banks and lending institutions do not like to lend any money on short leases. Historically, that level was around the 60-year lease. Later on, it became around 80. They wouldn't provide a mortgage. So it's now around the 80-year lease. The reason being, if you are getting a 25-year mortgage and you have an 80-year lease, in 25 years later, that lease will only have 55 years unexpired. Right. Even in current market conditions or value remain the same, the value of the property will diminish due to its lengthy lease. Of course, the other thing is that the short lease affects the marketability of the property. People cannot get a mortgage, so it's not ideal to having a short lease. On lease extension terms, under the current Act, marriage value becomes payable in the premium calculations when the lease drops below the 80 years threshold. Now, marriage value by definition is the additional value created when you merge two or more assets together, and that creates an additional value on top of what it would have been the 3 or 2 assets on their own. You may have 3 pieces of land that they're quite small, you cannot build anything, and each piece of land has a value of, say, £200,000. By merging the 3 together, you can do like a bigger development, and that combined value may now have a value of £1 million instead of 600. In leasehold contents, marriage value is the uplift generated by extending the lease. So if you have a 80-year lease, it's called an X value. If you have a 170-year lease, the value would increase.
How do you determine the marriage value, Panicos?
The marriage value in lease extension calculations, it can either be assessed through market transactions, which is mostly near impossible because you need to assess the value of a flat with, say, 80 or 70 years and a flat with a long lease. It's not that common that you're going to have the comparable evidence to calculate the difference in value. So the other way of calculating is through tribunal determinations, what has been adopted in tribunals, or what we call the relativity graphs, where graphs created by big institutions and firms where you can calculate if you have a 75-year lease, this is the percentage of value.
And when is the marriage value payable? Because if I'm not mistaken, 80 years it triggers the marriage value.
At 79.99 years it's triggered. So my advice to investors and property owners is always avoid to drop that 80-year threshold.
And I agree with you, Panicos, because from a legal perspective, when that 80 years is approaching, we are hot on it to make sure that any relevant notices or anything are sent out in good time before that, because it becomes a lot more expensive when it gets to that threshold.
Yeah, as a rule of thumb, the marriage value element on the premium calculations reflects approximately 50% of the premium payable. It very depends on the years, but as a rule of thumb, is 50%.
So essentially, as the lease drops, more marriage value becomes payable. So so even though 80 years is a trigger, even once it goes below 80 years, the lower it drops down, the more the premium goes up, essentially, is what you're saying.
So if we extend the lease at 81 years, there won't be a marriage value payable?
No.
Okay. So the investor needs to be proactive, not reactive, essentially.
As I keep saying to people, it always depends on their personal circumstances, when to do it. Are you remortgaging? Are you selling? Yes, do it. I had clients who intentionally do not extend their lease, and that could be linked to inheritance tax, for inheritance tax purposes. They'd rather have a low value asset for inheritance than an extended lease.
Cheraine, and from a legal risk perspective, what disputes or challenges do you most often see in residential leasehold properties?
So obviously I've been practicing as a solicitor for like 16 years now. I have seen it all and it is very interesting, but the ones that tend to come up quite a bit are those around kind of service charge and ground rent arrears, in terms of well, what's reasonable for a leaseholder to pay? And sometimes the leaseholders view that perhaps they could get it cheaper. Or, for example, the demands haven't been sent out correctly under the lease. So there's quite a few disputes that arise over that. Other things that I've seen are around managing agents, and the way in which a managing agent might manage the property might be different from one to the next. For example, the way they handle major building works programs and things like that. The trouble is with disputes generally is it costs money to deal with them. And a freeholder is in quite a good position under leasehold tenure, because generally under the lease, there are provisions that allow them to recover their costs. Now, in some cases, they can apply to the tribunal to stop that. So even if a leaseholder disputes these charges or enters into a dispute generally, they've always got to bear that in mind. And also the fact that if they're wrong, then potentially their lease could be forfeited and effectively come to an end. So we try and say to leaseholders and freeholders to try and resolve their disputes just generally, rather than becoming embroiled in court or tribunal litigation and things like that. The other thing is, if there are disputes ongoing, it can affect when an investor eventually decides to exit the market. So if they're trying to sell their asset, those kind of disputes do need to be disclosed to a buyer. Otherwise, there could be claims for what we call misrepresentation. It could affect the sale process in terms of elongating how long it takes to sell the property. Lenders may not be willing to lend on that property either if there are outstanding disputes. So again, that's key to try and resolve a dispute. And what a buyer may want at the end of the day is some kind of indemnity policy in place, depending on the type of the dispute, or retention to be held by the seller until that dispute is basically resolved. So disputes aren't great for everyone, but I think they are quite key when you're trying to exit the property and trying to get them resolved beforehand.
Panicos, and can you walk us through the lease extension process in just really simple terms? And how long does it typically take?
There are two types of extending the lease, one being the statutory route under the current act, or the second is proceeding on an informal basis. An informal basis is when the landlord and the lessee get on the phone, get together and say, okay, I want to extend the lease. How much do you want? Let's do it. There are merits of doing an informal, especially when it comes to costs, but it also has some drawbacks, like an informal procedure will not set or lock the valuation date. So if your negotiations with your freeholder get protracted, then your valuation date keeps ticking. With the statutory route under the Act, that valuation date gets locked, being the date of the initial notice. The lease extension procedures take the statutory route, starts by the valuer assessing the value of the property, analyzing the lease, the ground rent patterns, any tenant improvements in the property, if there is marriage value, the relativity, and put all together, we come with the premium calculations and a final figure. Then the next step is for the solicitor to serve the initial notice to the freeholder. On the initial notice, you have to quote a premium that you're offering. So that premium is what the valuer will tell the freeholder and the client to serve. An important element on the premium to be quoted is that that premium has to be a reasonable figure, otherwise the notice can be deemed invalid. So if your premium is £20,000, don't quote £2,000 or £5,000, because your notice may be deemed invalid, and then you start from the beginning. Then the procedure, once the initial notice is served, the freeholder has a clear period of 2 months to serve the counter notice. Once that is done, they were going to come with their premium they're seeking. And next step is for the two valuers to exchange their calculations, their views, and hopefully try to come to an agreement as to the premium payable. There is always some disagreement as to the values, and there are cases where the two valuers will not come to an agreement. The next step, if that doesn't happen, is to apply to the tribunal for determination. Tribunal determination, it protracts the timing of the lease extension because at current workload of tribunals, you're looking between 6 and 9 months before you have a hearing. But don't forget, the valuation date will always be locked as the date of the initial notice. So that is not, timing is not taken.
Okay.
Yeah. So we'll always look back at what was the value on that specific date.
Stavros, from an investment point of view, when does it make sense to extend a lease, and how should investors take this into account when they're assessing price and returns?
I think a lease extension makes sense when a lease is approaching 90 years, when the property is becoming harder to mortgage, when the exit buyer pool is shrinking, or maybe it's a more difficult sales market because, as Panicos mentioned, it's harder to remortgage or harder to exit because the new buyer will need to mortgage, so it's harder to get a loan on them. And as Panicos mentioned, when marriage value is becoming a bigger factor, when you're approaching the 80 years, you have to pay a marriage value. Below 80 years, the cost of extending increases significantly due to marriage value. So ideally, investors should be proactive rather than reactive. We had a case as well that with Mr. Panicos, actually, we've managed to serve the notice 2 days before the 80 years mark. So we saved around 40,000 in marriage value. So that was, we ran a marathon on that, yes. Also, the marriage value impacts IRR and exit value, because when you extend, you preserve the exit value, you maintain the buyer demand because it's got more years remaining on the lease, and it's protecting your refinancing options. If you delay, the extension cost increases. Exit pricing is discounted because the new buyer will want a discount to factor in the new marriage value. And you have a narrower sales market, so it's harder to sell essentially. So investors, when they're underwriting a deal, they should always consider the cost of extension, time of extension, because if they have 2 years to sell, for example, and it takes 1 year to do the extension, as Panicos say, then it reduces your annual returns. Another consideration is when the investor is buying a property, they need to do their due diligence. They need to check the exact unexpired term of the leaseholds. They need, as Cheraine mentioned, to check the ground rent terms, especially on old clauses, which the ground rent doubles every 10, 15 years. They need to also check the freeholder, how responsive he is, how difficult he is, because we've been in a lot of cases where the freeholder is a difficult freeholder. So you're just incurring costs and time just to agree something with the freeholder.
It's also a case of missing landlords as well.
Yes.
Where they may have sold the 2 or 3 flats. They kept that interest of the freehold, and they just disappear.
Well, I've dealt with quite a few cases where we've got missing landlords, and unfortunately it does involve applying to like the court and several court hearings to get vesting orders. So it's not a quick or easy process, but what you need to determine as well is the terms upon which that lease is going to be acquired as well. So unfortunately, it's not the case of drafting one application, it's actually multiple applications, and that can actually add up quite a lot in terms of legal fees. And that basically, but the benefit in some ways is if the premium is quite expensive, those costs can generally be offset against the premium that would be payable in case that missing freeholder does arise at a future date and the money's normally paid into court.
Cheraine, and what legal risks should landlords and investors be aware of when they're negotiating lease extensions or dealing with freeholders, in your experience?
So obviously, I think this has been pointed out by others already, but generally most lease extensions do go through without issue. I just want to say that they are like more straightforward. But there are ones that aren't as straightforward, and the things just to generally look out for, especially for those who are not used to dealing with lease extensions, the general practice is to put up quite a high figure in the counter notice. So don't, especially if you don't get any legal representation or assistance for the valuer, don't just go ahead and accept that figure in the counter notice, because it generally settles at somewhere in between. So that's one thing definitely to look out for. Another thing is in terms of like if you try and agree a voluntary lease extension. So as has been said before, you're not serving a notice, you're not setting a valuation date for when to set the premium. And also there's no time periods in which the freeholder must complete that lease extension. So if you're getting up to a deadline of, say, the 80 years, your freeholder could be quite deliberate by stringing things out. So then it's important at that stage to perhaps get legal advice if you haven't done already and swap to the statutory route. Other things that we've seen is just even in a statutory lease extension, dragging out negotiations and forcing parties to make tribunal or court applications to protect their lease renewal rights. And obviously the trouble with the tribunal is the costs of that application, you're going to incur costs, but you can't recover them. So then it forces you perhaps to agree a deal that you wouldn't otherwise have done. Essentially. And we've also seen in terms of voluntary lease extensions, freeholders trying to insert clauses in those leases that they wouldn't get on a statutory lease extension, because essentially it should be on the same terms apart from a few kind of exceptions. So, but like I say, generally things do run smoothly. It's just making sure that you get the right advice from valuers and lawyers to make sure that you're aware of these possible traps and can deal with them in an appropriate manner.
Panicos, so there's been a lot of discussion around leasehold reform. What changes do you think investors need to know about, and what is likely to actually happen in practice?
What is going to happen is the million-dollar question. The Leasehold and Freehold Reform Act 2024 has actually received royal assent in May 24, so it is an act. However, it's not effective because it requires additional legislation. So what we know from the new act, the proposal is that marriage value will no longer be payable. The lease extension will be for an additional term of 990 years instead of the current 90 years. There is also provisions for the Secretary of State to set the capitalization rates, deferment rates, which are essentially in our premium calculations. And also is going to be a threshold for landlord's costs recoverability. Starting with the landlord's cost, going backwards, under the new act, the Secretary of State will be setting a threshold by which if the premium is less than that threshold, then the landlord will be able to recover their non-litigation legal costs and professional fees. If it's above, they will not be able to recover. We've got no idea at what level this threshold may be set, but we know that there is some provision in the Act. The additional things of the new reform is, whilst there is the talk of abolishing marriage value, which we're currently adopting the 5% deferment rate for leasehold flats and 4.7% for houses, the new deferment rate will be set by the Secretary of State. Now, if that new rate, which again, nobody knows where it may be set, if it's anywhere around the 3.5 or 3.6%, it will actually counterbalance the marriage value element of the premium. So from one point of view, yes, marriage value goes out, but if the deferment rate drops, then the premium will go up, and that will kind of counterbalance the whole premium payable. Another change, the proposed change, is the ground rent payable. Is for calculation purposes, the ground rent will be calculated at 0.1% of the capital value. So like in modern leases where developers have inserted extortionate ground rent levels of something like £1,000, that would be, when we're calculating the premium, will be at 0.1% of the value. So if, let's say, it's a £500,000 property, the ground rent would be £500 and not 1,000. The only thing that has actually become effective from the new act is that it's the rule of ownership, or when you can apply for a lease extension, which it came in January 2025, and LSC can apply straight away from purchase of the property, where the current rule was 2-year ownership before you're entitled to extend.
Stavros, and how do leasehold issues affect international or non-UK resident investors specifically?
I think leasehold becomes more complex when you're investing from abroad. We know this because we have many clients from Cyprus that invest in the UK. As Panicos and Cheraine mentioned, you need to have a good relationship with the valuers, solicitors, understand the market, to understand the timelines, because missing statutory deadlines can be very expensive. Structuring ownership correctly is very important. Non-UK residents must consider ownership structure. If it's a company or an individual, there are specific tax implications, the financial limitations. Here at Consulo, this is what we do essentially. We get case by case on each investor and we manage the process for them. Many risks from passive ownerships is assuming that the asset will run itself. This gives problems as the ground rents keep increasing. We have service charge disputes, which can cause many legal fees, deteriorating building management, and lease term erosion. Leaseholds require monitoring, which is hard to monitor from overseas. You need to have good contacts and relationships with the UK to manage this process for you.
There is no certain implementation date of the new act, as there have been delays caused by 7 institutional landlords who have instigated a legal challenge against the government. The government has to be 100% before pressing the green button of implementation. In addition, once we've got an outstanding act that is an act but is not yet effective, the government has recently started a new consultation on the common hold reform, whereby the aim is to abolish the whole leasehold format, and common hold will become the new default system of ownership.
So before we wrap up, I would love to get a final perspective from each of you. What practical advice would you give investors who are holding or considering buying a leasehold residential property in today's market?
Okay, so as Panicos has already kind of touched upon, the government is pushing for more tenant and leaseholder rights at the moment. We've seen it with the renters' rights reform and leasehold reform, and now pushing into common hold. They have recently introduced a new bill which is open for comments, but I think the most important thing for investors is, given all these changes, is to basically get advice, make sure you're on top of it, and look at what your long-term aims are. So it could be advice from valuers or lawyers or agents. Now, some of these reforms might be helpful. For example, some of them are reducing ground rent if it comes in on existing leases, which would be helpful. And some of it would be abolishing forfeiture, which leaseholders don't like generally. But other reforms, including converting to common hold, will get rid of leasehold. But essentially, that is going to be very difficult to convert existing buildings from leasehold to common hold. So investors have to also bear in mind that if they buy a leasehold property, it could convert to common hold at a later date, and there might be additional costs involved in that conversion. And also then, how do they manage their interest in light of the common hold changes? So investors just need to keep on top of the updates, really, from my perspective, and get advice.
I'll give you an example, actually. I had a call for one of our existing investors. He was like, Stavros, I found this flat in central London. It's very cheap. I can get a yield of 7% in central London residential. Would you mind having a look? He sends me the details of the flat. It had 23 years unexpired lease term on the leasehold. So I told him, the leasehold is too short, so you need to consider these costs. After adding all the calculations, costs, legal fees, and also it had a high service charge, then the yield of the flat came to 4%. So essentially it halved his return just because of the leasehold was 23 years. So I think the investors should look at the lease length. Essentially, it's very important.
Always seek early advice and take the advice even if it's not favorable or in line with your plans and strategy. Good advice is often annoying. Set a strategy early and review frequently. The leasehold industry looks to be changing rapidly with all the reforms that are ongoing. If all the government proposals get through, leasehold interest may be a thing of the past, but it's not going to be extinguished.
Thank you so much for sharing your valuable insights. This has definitely been very helpful.
Thank you.
Thank you.
Thank you for having us.